All right, so still talking about the debt ceiling today and really what kind of impact this is going to have on the markets in general. I think a lot of people are really a bit on edge today, so hopefully we'll get a chance to kind of break this down, take a look at some risk assets, we'll look at Bitcoin, etc., and how all this plays out for you. My name is Paul Barron. Welcome back into Tech Path. Before we start, I want to, of course, kind of go into our offer that we're doing, and that is over on both the Mastermind project as well as the Crypto Power Index. You guys can go in and actually jump into this on a bit of a sale right now. We are doing a lot of giveaways as well, so just go over to this page right here. You'll see all of our giveaways once you become a member. If you're already a member of our Power Index or our Mastermind group, you guys are already eligible. We're giving away $1,000 in Bitcoin. We've got a wine hour we're doing. We're also giving away some Crypto Chick NFTs. That's this month. In July, we're doing some Ethereum and a bunch of stuff. So go check this page out. I'll leave a link down below for you guys to check it all out, but lots of giveaways for the summer of savings. Let's talk about what is happening right now in DC. The House passes bill to raise the debt ceiling. Last minute movement. I think a lot of transactions are happening right now in the back rooms of how this thing gets done before the drop dead date in about 4 days of how this plays out. So, the key here is it's going to have some impacts on how the market plays out. And we'll talk about that and why this is important. One of the things that they hit on this article in The Hill was passing the Fiscal Responsibility Act, a crucial step for putting America back on track. Yes, of course. It may not include everything we need to do. He talked about this, but it does absolutely have what we have to do right now. The bill does suspend debt limit through January 2025. Interesting. While also implementing a slew of cost-cutting measures, including new spending caps over the next 2 years, clawback of about $1 billion of unspent COVID-19, permitting reform, puts an end date to Biden's pause on student loan, beefs up the work requirements for federal assistance, and then also shuts down the IRS plan for their Inflation Reduction Act, which was a lot of people looking at in terms of IRS agent growth. So all that's been kind of decked and put away. Some people would look at this, okay, it might be a win for the Dems, could be a win for the Republicans. The point is, I think both sides gave up a little bit here. Kobe EC letter kind of hit on this. U.S. debt ceiling been raised 79 times over the last 63 years. Over the last 10, the U.S. added about 15 trillion. Remember, we're at I think 31.4 trillion right now on the debt ceiling. Since 2020, debt is up by 8 trillion. At what point do we just remove the debt ceiling altogether and the U.S. basically gets unlimited power either way? That, I think, might actually happen at some point down the road. So these are the kind of things that only push you into assets that don't have these kinds of volatility measurements in place. We've got some clips here to kind of go into how this may affect Bitcoin, but I'd love to get you guys' feedback. Make sure and drop some comments down below and let me know what you think and how you're going to play this as the debt ceiling gets raised and we start to see a lot of T-bills come into the marketplace. How are you guys going to play it? Because we'll start to see some movement in that. I'll talk about that. Debt ceiling, Consorti said debt ceiling is resolved, but the real problem here, of course, is when the U.S. Treasury issues new T-bills to refill the TGA, which will basically be the coffers. They'll have basically a 5.25% coupon to match current bill yields. This is going to be a huge run on where this is going in terms of investment opportunity. And what I mean by that is people who own securities, people who own risk assets, they're going to be looking and say, wait a minute, maybe I can go ahead and pop it a little 5% move here and there and take advantage of this move right now as we start to see these T-bills coming onto the market. Here was Peter St. Ong talking about this as well. Let me go to this clip right quick.
From pesky voters. So not only did McCarthy give away $4 trillion for peanuts, not only did he manage to find the exact center of Democrat Party voters, he actually crippled debt ceilings until 2026. When, according to the CBO, we will have over $36 trillion in federal debt. That's almost 150% of GDP and almost $300,000 for every American who actually pays income tax. So what happens next? Based Senator Mike Lee has promised to use, quote, every procedural tool to fight the deal, while Senator Rand Paul lamented that, quote, conservatives have been sold out again and is demanding a deal that balances the federal budget in 5 years. Unfortunately, they are massively outnumbered in the Senate, even in their own party. While Democrats will, of course, greenlight a deal that strikes the perfect balance for their voters. And so, barring a miracle, the deal is done. The Senate will pass, Biden will sign, all before the June 5th deadline, meaning it is back to the March to 36 trillion. By the CBO's own tally, that would be almost $5 trillion in fresh deficits to keep the money printers running hot for years to come. Republicans, independents, even fiscally aware Democrats will keep getting screwed until enough voters of every party wake up, get angry, and demand the clowns in Washington actually serve the voters.
Yeah, well, that's going to be a long time from now, I think, because we are dealing with a pretty good slew of clowns there, especially as it relates to how all this plays out into investment opportunities going forward. Really, this only makes me think that risk assets are going to continue to be a very strong position. Now, there will be a dip. We will most likely see that occur. And that, I think, is the opportunity that is set in front of us right now. We actually pulled a clip from Jerome Powell back in 2011. I want to kind of play this for you guys. Listen to what he had to say back then.
So bad economic news drives people out of stocks and into bonds. And when people go into bonds, they bid up the price of bonds, and that bids down the interest rate that the government is required to pay. So that's what's happening now. We had bad economic news last week. Another thing that draws people into our bonds is the turmoil in Europe, as it becomes more and more clear that the Europeans have not figured out what to do with the potential default of some of their major nations. And so global money tends to come into Treasury securities at that time. So that's what's going on. Now, the market is clearly pricing in a successful vote on the part of the House and the Senate. Stock markets were up. I haven't looked since I got on the air, obviously, but stock markets were up all over the world as soon as the president made his announcement last night. So, if the bill does pass, it'll be, at least in the short term, good for the stock market as well.
All right, so a couple of points there. I think the key is this is all playing out into a liquidity crisis that could be coming in. Lynn Alden was tweeting here, basically some of my posts and interviews on liquidity went semi-viral today. It's worth a thread to summarize and clarify the dynamic. And what she was talking about, if you haven't checked out our video with Lynn, we had one with her earlier this week, and that was her sentiment right on that video, was that we were getting ready to hit that liquidity crisis. And really what it simply means is people are going to go out of risk, they're going to go out of securities and start looking for easy money, which is going to be T-bills paying 5+%, 5.25% to be accurate. And that's where I think we'll start to see the liquidity crunch really become an issue. And this will be a global, situation. Now, what does this mean for how the government and how the Fed will start to react? And when will we see the quantitative tightening start to slip and move back into quantitative easing? That is really where it all boils down. This is an old clip that was done by Sherman. We've played this a couple times, but this is the framework of how people in DC are thinking. Listen in.
Crypto bros make money literally by making money, and they've made over $1 trillion out of thin air. They'll accuse the U.S. government of making money out of thin air. Maybe we do, but we're the U.S. government. Crypto bros make money literally by making money.
We're the U.S. government, so we can pretty much do anything we want, is essentially what that means. I think at the end, GOP lost big here in the overall idea of trying to get or rein in any type of potential budget and deficit for the future, and it only is opening up what I think is a very risky situation for the United States. But it does open up an opportunity in the next 18 months that I think we're going to see play out. Now, the things that have to happen before that are a few. One of the biggest, of course, is going to be jobs. You've got jobs right now breaking. U.S. jobless claims rise 232,000. Estimated was 235. The previous was 230. So this is not a good indicator. It's one that we've said is coming. It's just a matter of time before we would start to see the job numbers. Now is the time that this is all starting to happen. At the same time, in terms of real estate, credit crunch, all of the three horsemen that we've been talking about, jobs, credit, and real estate, are finally at the door. And now we've got to play this out with a debt ceiling going to pretty much an unlimited capacity through 2026. And what does that mean? What does that mean in terms of an opportunity? Wall Street investors now officially abandoned the housing market. This gets back into it. Redfin reporting a colossal 49% crash in investor purchases. This is in Q1 of 2023, guys. This is the biggest annual decline on record and even bigger than the drop that occurred in 2005, right before the last crash. So all this is pointing at one direction. There is going to be an opportunity that may be the greatest opportunity of our lifetime that's happening around the recession, how this quantitative easing will kickstart back into play, and how we will, because remember, all this is timing in through a presidential campaign that will be about this, really getting into heated centers around this time next year. So timing is going to be everything here on this. Let me play this clip from Mike Novogratz, but mainly I'll just mention it. Basically what he's talking about in this clip, and it's at risk adjusted basis on Bitcoin and Ethereum are the two best assets to invest in over 2 to 3 years and 6 months, says Novogratz. Volatility adjusted, it's been much better than even JP Morgan. Mainly what he says in the clip is pretty simple. Listen, we think these things are going to continue to move. Yes, there might be some downside to this, but the opportunity when you look at a 2 to 3 is huge for both Bitcoin and Ethereum. And for you guys, if you're watching our show, I'm assuming you already think this way, is that this is not one of those assets that you're flipping, every 30, 60, 90 days. This is something that you're trying to figure out entry points and in some cases exit points when it makes sense. But mostly you're trying to figure out how to stack and doing it at the right time. So timing is tough. So obviously dollar costing at the right kind of bloodletting that occurs in the market is key. That's how we do it. We don't necessarily go in and blindly cost average. We look at those opportunities that that happen when these markets start to have these volatile notions like what is getting ready to happen right now. Now, with all that, you've got Fidelity coming in. This is an analyst over at Fidelity saying that Bitcoin has found its place into the 60-40 portfolio. That's a good thing because that's going to get into mainstream investors. We already know Fidelity. We've done a video or two on this. Check out our videos below on our outline of what's going on with Bitcoin and Ethereum inside Fidelity. They're going to be, I think, one of the key players for mainstream. And I don't even call it adoption. I'm just talking about people that are more sophisticated investors are going to look to Fidelity as an opportunity for where this might go. A couple of quotes in the article. He discussed the current state of Bitcoin and its correlation with other assets, which is basically a comprehensive analysis of its place in portfolio diversification. You know that. We are on that as a big, meaning this is a big part of how we diversify our portfolio. Bitcoin still plays in that role as our number one digital asset right now. Chart showing a regression of both network and real rates, pointing out that since 2017, these two assets obviously have had a correlation of about 91%. This suggests that Bitcoin's network growth and the macro landscape reflected by real rates explained a significant portion of its price movement.